Hello and welcome. You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Bulls bounce back on Dalal Street. Sensex surges over 1,500 points. Nifty jumps 400 points. All sectors end in the green. A day after it hit an all-time low, the rupee rallies 47 paise against the dollar to close at 79.44, marks its largest single-day gain in a year, propped up by FPI flows into Dalal Street. Gautam Adani is now the third richest person in the world. Total net worth reaches $137 billion. First Indian and Asian to achieve the feat. Adani Group shares zoom up to 4,000% since FY21, adding 17.45 lakh crore rupees to investor wealth. Good Glamm Group eyes public issue by the end of 24, tells Business Today TV that it expects an operating profit this fiscal. China shuts down its electronics hub Shenzhen for the second time this year, spooked by just 35 COVID cases. Draconian 4-day lockdown justifies decisions by manufacturers to look elsewhere. For the first time ever, there's an Asian among the 3 richest people in the whole wide world, and that Asian is none other than 60-year-old Gautam Adani. Riding high on the ballooning market cap of his 7 listed companies, the Adani Group chairman's net worth hit $137 billion or 1.1 lakh crore rupees as of today.
We will launch Jio 5G across multiple key cities.
A day after Mukesh Ambani made headlines with his plans for succession and 5G rollout among other business plans, his fellow Gujarati Gautam Adani is in the limelight again for ascending to the 3rd highest perch in the Richie Rich listing. According to the Bloomberg Billionaires Index, Elon Musk is still the richest man in the world with the wealth of $251 billion. The runner-up is Amazon founder and chairman Jeff Bezos, trailing at a distant $153 billion. Gautam Adani is now at number 3 with a personal net worth of $137 billion. Reliance Industries chairman Mukesh Ambani, in comparison, is at the 11th position with a net worth of $92 billion. While Adani added nearly $61 billion to his wealth this year, the Ambani fortune has grown by around $2 billion. Powering the spectacular rise in Gautam Adani's personal fortune is the performance of his listed companies in the stock market. At least 3 Adani-packed companies hit a new lifetime high today. The flagship Adani Enterprises shares closed up at 3,193 rupees with a market cap of 3.6 trillion rupees. Adani Transmission shares also hit a lifetime high, as did Adani Total Gas. The other Adani companies, though not at their lifetime highs today, have also seen their shares rise steadily. The total market cap of the Adani Group climbing to a record high of more than 20 lakh crore rupees. Gautam Adani has also emerged as one of the biggest deal makers in recent times. He bought a controlling stake in Holcim's India cement business, purchased thermal power operator DB Power for 70 billion rupees, bought Macquarie Asia Infra's toll road assets in Andhra and Gujarat for 31 billion rupees, took over the Haifa port in Israel and is also attempting a takeover of NDTV, all in the span of 2 months. The big question mark against all this is the group's total debt, which stood at 2.2 lakh crore rupees on March 31st this year. A recent credit sites report has stated that Adani Group was deeply over-leveraged and that competition with Reliance could lead to Adani Group to make imprudent financial decisions. Bureau Report, Business Today Television.
After a manic selling on Monday, bulls made a strong comeback on Dalal Street today. Benchmark indices clocked their biggest intraday gains in 3 months as broad-based buying emerged across sectors. Sensex and Nifty surged up to 3%. Sensex zoomed over 1,500 points to reclaim 59,000. Nifty too jumped over 400 points to end above 17,700. All Nifty stocks ended in the green. Auto and realty stocks saw a stellar rally. Bajaj Twins topped the charts. Bajaj Finserv soared over 5%. Other top blue chip gainers included IndusInd Bank, Tech Mahindra, ICICI Bank. Moreover, the rupee notched its biggest one-day gain in a year against a wobbly dollar. This comes on the back of a rush of foreign investor inflows. The rupee surged 47 paise to close at 79.44 against the US dollar today. With volatility refusing to budge, equity investors are wading through choppy waters to find value in this market. The current macro environment has led to a tussle between the bulls and bears on Dalal Street. So where should you park your money to hedge over volatile market conditions? Udayan Mukherjee, our global business editor, and I spoke with Anil Sarin from Centrum Wealth on his view. Listen into an excerpt.
Given your outlook on the economy and the markets, if you were to say, look at the top 10 holdings of your PMS schemes, what is the tilt towards? Is it towards quality? Is it towards value? Is it towards growth from the framework that you just outlined?
So it is, for sure, it is mostly towards growth. Then there is quality, and then there is value in decreasing kind of orders of percentage. So growth, basically, it is about bottom-up stock picking. But if you were to look at it thematically, if you were to look at it in terms of what is working, so yeah, one would say, as a theme, lending is back. I mean, we have had a period of time when notably the PSU banks, but many private sector banks were also undergoing some asset quality issues. Then in the recent times, there was this COVID-induced, Supreme Court moratorium where you could not really go and recover your bad loans from people who aren't paying you back. So there were some headwinds, and then there was also this issue of foreigners continuing to sell for some 7-8 months at a time, and they were selling what they owned, which was banks and IT stocks. But now those kind of issues are behind us. So you see bank lending doing quite well. So within the BFSI space, we like lenders more than we like asset managers and more than we like insurance companies, etc. So lending is one theme. The other theme is the return of commercial vehicles. I mean, commercial vehicles typically they have a 4 to 5 year cycle. And we think that the next cycle, the up cycle, has just recently begun. So that could be another theme that we are trying to play through, indirectly or indirectly, through the stocks that benefit from commercial vehicles, namely trucks, starting to do well. Another theme that we are focusing upon now is logistics. So we have a bunch of companies that are very capable in terms of technology, in terms of on the ground, feet on the street, distribution reach. They have good clientele, and they have relationships, with different providers in terms of road transport, air transport, sea transport. So multi-transport operator kind of a framework, but they aren't fully utilized at this point in time. So, and they have a characteristic that, barring one, which is a recently listed logistics name, all of them are 7,000, 8,000 crores market cap and below. So ownership is very, very poor amongst the larger institutions. So, like I said, not fully utilized, but fully capable of meeting the needs of the corporate sector for reliable, transportation with full information flow and traceability and trackability, etc. Fully capable on the IT side, etc., but not yet utilized. So there is tremendous operating leverage in store as we go forward, as more and more corporates choose to go the organized sector with the organized sector players, as opposed to using discrete trucking, discrete shipping, discrete air logistics. So that's another area where we feel pretty confident and hopeful. Another theme, of course, is healthcare. Now you can play it through diagnostic companies, or you can play it through hospital companies. So a long way to go. It is both these are benefiting, from the growth of health insurance, which, as you know, is growing very fast. So it is an ancillary kind of a play on the growth of insurance, which is all these hospital companies. So these are some of the themes that we are going after. And then there are a lot of bottom-up bespoke names,
right,
where you really can't slot them into a theme, but they are also there.
No, this is interesting, Anil, because the sectors that you've just spoken about, whether it's on the lending front or commercial vehicles or healthcare, they seem to be more or less plays on the domestic economy. Should I infer, therefore, that you are not as optimistic on the export plays, like maybe pharmaceuticals or information technology or even chemicals, specialty chemicals? You don't find that much value in those spaces or growth?
No, so we are there in the specialty chemicals space, but those would be, if I were to reflect upon it, those would be more domestically focused, with some export being there. Pharmaceuticals, no, we are not so constructive at this point in time. In information technology also, we like the product companies in preference over the services companies, mainly because once you have built up your distribution and brand, then the incremental benefit from owning IP is more than what you would get from being a well distributed, well accepted services company. Obviously, the main reason behind that is that there is much lesser operating leverage, and these days transport costs have gone up, and also the labor costs have sort of gone up. Attrition is very high. So we like IT, but we are playing it through product companies for the reasons I outlined. But yeah, by and large, what you said is right. If you were to sort of split it up, it would be 3/4 of our portfolio, or more than 3/4 of our portfolio, would be domestically focused.
I want to understand, Anil, where the confidence is coming from in the retail story. I mean, we know, of course, that the retail participation has been immense and that some of these sectors are expected to benefit from that. But given the overarching theme of everything getting costlier, and that perhaps putting a squeeze on spending, for example, is there any risk to this theory, or is the domestic story so robust?
So, yes and no. I mean, as you know, there are many Indias. So there are people who are less affected by inflation or by these tighter economic conditions. Or there are youngsters who are fairly amenable to advertising, and they are in sync with latest trends. So let's say if you go with QSR companies, they, in the most recent quarter also, they have shown, QSR, I'm talking about the McDonald's and the Burger Kings of the world, or the Jubilants of the world, they are showing rising profitability at the gross margin level. So yeah, that is, so selectively you can find pockets of affluence, of rising profitability and a long runway of growth, and where the valuations are not yet at extreme levels.
And you can catch the full interview on businesstoday.in as well as our YouTube channel. Let's take a very quick break. Back with more on the other side.
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। Ebix कैश हर खुशी के लिए काफी है।
मैडम जी, वो सारे पैसे लेके भाग गए और मेरा वड़ा पाव भी ले गए।
दिखाते हैं इनको।
वड़ा पाव? हिलर, निकाल दे इसके बाद।
पंक्चर के बाद भी इससे हवा नहीं निकलेगी, क्योंकि ये है JK पंक्चर गार्ड टायर, जो कील लगने के बाद भी होता है हील। जेके पंक्चर गार्ड टायर, अब हवा नहीं निकलेगी।
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। इबिक्स कैश हर खुशी के लिए काफी है।
Attic Fittings make your furniture work beautifully. German quality you can trust.
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। इबिक्स कैश हर खुशी के लिए काफी है।
Welcome back. While many have shelved their IPO plans, the Good Glamm Group hopes to add glitter to the stock market. The group is eyeing an IPO in 2024. My colleague Sakshi Batra spoke to Good Glamm's Naya Sagi about getting ready to hit the bourses as well, and also how the group is looking to foray into international markets.
Is the Good Glamm Group looking to launch an IPO, and by when can we really expect that to happen, if that is on the cards right here? Because we've already seen how Nykaa has been one of the biggest grabs for investors, how they really crapped up onto that, and we've seen this potential that the company has displayed after its listing as well. So help us understand, what's your view on that?
Yeah, no, so we're very excited. I mean, obviously about that. That for us is a natural trajectory we want to take. And I think, we're looking at potentially listing in 24.
Okay.
I think till then, the efforts are going to be that we want to be a very cash-rich company, right? And I think that's sort of, we've been focusing on growth, and I think the journey, because, we have the lowest CAC in the industry, the journey to becoming really cash-rich and really focusing on very strong EBITDA multiples, right, is going to be, is the journey that we're on right now. Right. So I think that's really the focus for us over the next year and a half. And I think, we want to list in India. Right, India has some of the richest consumer multiples, right? It is a place where we've built out our brands, where people know us and they, familiar with our brands, right? So the retail, the retail market is very, they know us, they're comfortable with us, right? This is a place where we want to list. And I think Nykaa, like you very correctly said, has shown that story of success and demonstrated strength, right? Post the IPO as well. So I think this is the plan so far, and super excited to be on that journey actually.
Do you see the international foray being the next, provider of a trigger or a growth driver going forward?
Absolutely. So we've already made the announcement, right? It's out in the press. So we're, we've actually gotten someone amazing, Asad, who's been a seasoned leader in actually internationally expanding a bunch of amazing brands. And he's joined our group to basically lead international expansion for us. So the Middle East is actually our first foray. We're interestingly starting offline first and then going digitally.
You have a office in Abu Dhabi, if I'm not mistaken.
We have an office in Dubai. I mean, it's mainly Asad and his team currently. But yeah, so I think the whole sort of foray of international has already started. It's something we're very, very big believers in. We're also looking at other geographies as well to see where the next play can be.
So would it be developed countries? Would it be some of the emerging countries?
We'll be making another announcement very soon. So if I look at it, right, last year was the year of acquisitions, right? And that really propelled us ahead of every other player in the market because this kind of scale and this kind of just amazing brands and content and creator assets coming together was unprecedented. This year is the year of consolidation, of integration, and maybe 2 or 3 other very strategic acquisitions. Next year is the year of international. So I think you'll sort of see this strategy play out. There'll be a few more announcements very soon.
So the acquisitions you're pointing out would be in all of these 3 segments that you have, the sectors that have consolidated together. Would it be 1 or 2 of them? And where do you see, which segment do you really see being the growth driver going forward for you?
It's a really interesting question. So, I mean, of course, we are open to considering interesting assets and interesting partners for acquisition in case they really help bolster what we're already doing across these 3 verticals. But like I said, I think the main focus for us is still to look for the right partner and the right acquisitive target in the male grooming space and on the offline sort of, touch points for us. In terms of how we look at these 3 sort of pillars, right? They actually kind of feed into each other. So the brands, the good brands is really the starting point, right? But even the good media co, the good creator co actually have their own independent P&Ls. Right. So and we've appointed CEOs to each of these, right? So the CEOs basically are the ones who are making the final calls on whether they want to bolster what they already have to offer, not just for the other brands or for the other sort of pillars in the group, but for themselves as well, their solutions. And, they take a call on whether they want to acquire more assets. But broadly, I would say that we're not really actively scouting acquisitions. We get some amazing inbounds, and then we'll consider them if it feels right.
Okay. And as India celebrates 75 years of independence, it's time to take forward the trajectory of the economy's phenomenal growth. How will the next 25 years look as India charts the growth path to achieve global leadership? Karishma Asudani spoke to India's Sherpa to G20 and former CEO Niti Aayog Amitabh Kant with an eye on India at 100. Kant also talked about the key themes that India is focusing on for the upcoming meet. Listen in.
So we're talking about India in 2047. How is it going to be different from India in 2022?
So one of the key aspects of this particular report brought out by the Institute of Competitiveness is that India needs to rapidly grow. India has done enormous lot in terms of digitization, in terms of ensuring that there is the Swachhata movement, that we've been able to provide electricity, we've been able to build roads, we've been able to provide houses, cooking gas connections. And what this report says is that India needs to grow at rapid rates for the next 25 years, and what it will entail in terms of bringing in huge amount of infrastructure, in terms of urbanizing, in terms of ensuring competitive efficiency of the private sector to be able to grow rapidly. And there's a huge amount on social progress, which means that India will have to improve its learning outcomes, its health outcomes, nutrition. But most critically, what the report says is that if India is to grow rapidly, the real action is in the states of India. And several states of India, many states of India will have to bring growth, progress and improving learning and health outcomes as the centerpiece of their growth strategy for the next several years.
Right. One question. You're talking about states, but I wouldn't miss an opportunity to ask you, because the G20 presidency is going to come soon for India in November. Now, let's understand this factor that because of a lot of geopolitical aspects, Russia-Ukraine crisis, China-Taiwan, a lot of supply issues, what is India expecting this time at G20? What are going to be our core themes?
Well, several things. One is that Indonesia is right now the president. Our objective, by the time India becomes the president, I think globally there'll be several challenges. There'll be challenge of global growth. There'll be challenges of global sustainability. There'll be challenge of accelerating the pace of sustainable development goals. And there'll be a huge challenge of inclusive growth. So all these issues will be critical and in the forefront.
Thank you, sir.
In a clear overkill, China has shut down the world's largest electronic market, imposing an all-out lockdown in the southern city of Shenzhen. The international tech hub of 18 million people, which neighbors Hong Kong, had reported 35 COVID cases this morning.
The army of workers in orange, the barricades and the draconian restrictions are all back in the electronics epicenter of the world, Shenzhen. With 35 new COVID cases declared on Tuesday morning, Chinese authorities are cracking down hard, shutting down the world's largest electronics market, Huaqianbei, a busy area home to thousands of shops selling computer components, mobile phone parts and microchips. Under the mandatory 4-day lockdown, residents have been forbidden to leave their homes and have to undergo COVID testing every day. All businesses have been ordered to be shut except supermarkets, pharmacies and hospitals. Even restaurants are shut with only takeaways allowed. The Chinese Communist Party's heavy-handed approach is expected to further hit the slowing local economy. In July, youth unemployment in China hit a record high with 1 in 5 out of work. Shenzhen had last been shut in March, impacting operations of global biggies like Tencent Holdings and Huawei Technologies, which have their head offices here, even Foxconn manufacturers and the Apple iPhone in the area. It is partly in response to these arbitrary Chinese measures that manufacturers have been setting up base outside China. In countries like India, Vietnam and Indonesia, hoping to soften the impact of the dragon's blazing fire. Bureau Report, Business Today Television.
That's where we leave it on the show tonight. Thanks so much for watching.
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। EBIX कैश हर खुशी के लिए काफी है।
फिश करी बनाने के लिए हमें चाहिए होंगे। Mama, do you know most fish don't blink because they don't have eyelids?
Wow.
माँ, वाव की बात तो ये है कि बीबी now delivers
Fresh fish home in 15 to 30 minutes.
in 15 to 30 minutes.
पता है आइंस्टाइन?
BB now from Big Basket. Groceries in 15 to 30 minutes.
Come.
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। EBIX कैश हर खुशी के लिए काफी है।
अपना इस्तीफा किसी पढ़े लिखे आदमी से लिखवाइएगा। खुद लिखेंगे तो मात्रा सब में गलती होगा।
13 दिन की सरकार के बाद जब अटल जी इस्तीफा दे भी नहीं किए तो हम तो फिर भी 1 साल से मुख्यमंत्री हैं।
कभी कभी खुशी के लिए कुछ ज्यादा नहीं, एक अनजान दोस्त ही काफी है। EBIX कैश हर खुशी के लिए काफी है।
So sorry. काम किया है जी, काम करेंगे, लोग हमें यूं ही बदनाम करेंगे। हमारी वजह से दिल्ली वाले हंस रहे हैं जी, समझ नहीं आ रहा फिर हमारे लोग क्यों फंस रहे हैं जी। क्या हुआ जी, आप इतने खास आदमी क्यों हो रहे हैं? बड़ी मुश्किल है जी, खोया मेरा दिल है जी, कोई मेरे दिल को समझाए ना। ईडी CBI से बचूं और बचाऊं कैसे, बिल्कुल समझ आए ना। मैं रोऊं या हंसूं, करूं मैं क्या करूं जी, बताओ ना कोई। मैं रोऊं या हंसूं, करूं मैं क्या करूं जी।
झाड़ू लेकर आया था तो झाड़ू लेकर जाएगा, सबका नंबर आएगा भाई, सबका नंबर आएगा।
जो होगा वो देख लेंगे, हम तो तैयार हैं जी। आरोप कोई लगा ले, हम तो कट्टर ईमानदार हैं जी। नमस्कार जी।